Warren Buffett says to be greedy when others are fearful. But he's not talking about stocks like AMC or Hertz or Lucid. This is a list of stocks in Buffett's holding company, Berkshire Hathaway, sorted top down by value, so what he has the most money in. You will see these are real companies: Apple, American Express, Bank of America, Coca-Cola, Chevron, etc., etc. The point is, when Buffett says to be greedy when others are fearful, he's talking about opportunities on good companies, not just crappy stocks that are dropping that oftentimes beginners attempt to apply that quote to. So in today's video, we are going to build a scanner within ThinkorSwim that will return us fundamentally solid stocks that are currently on a good price action dip. Let's hop on into the scan tab and focus on that first part: fundamentally strong companies. Luckily for us within ThinkorSwim, if I come into the add filter button here, there are fundamental filters. I'm going to select a couple right now that have to do with the money the company makes. Essentially, I don't want to see any stocks that are losing money. Now, stocks that are losing money could still go up. They could still grow into winning companies. But for the sake of this scanner, we want to find already fundamentally sound companies. This is not going to be a scanner that's like looking to take a risk on a crappy company that might grow into a good one. I only want to see already good companies. So first, let's go with EPS, or earnings per share. And essentially, I'm going to set this minimum to 0. So it can't be losing money per share. Next, let's come in and add another fundamental study, and this time let's go with EBITDA. This is earnings before taxes, what the heck? Earnings before taxes, interest, depreciation, and amortization, something like that. Basically, the money that the company either intakes or loses after all expenses. So I'm going to also set this to 0. Then one more fundamental filter, should I say. I am going to add net income and set this also to a minimum of 0. And within ThinkorSwim, you get these nice little sort of histogram bar charts that show you how many stocks will be included versus cut off using these filters. And look at how many, especially this EPS and net income, look at how many stocks. It's almost like half the stocks in the stock market get axed just from these two filters. So let's go ahead and run this scan, and already we are less than 1,800 stocks appearing on the scanner. We need to do some more work though to concise this list even further. On July 9th, 2018, Keurig acquired the Dr. Pepper Snapple Group for $18.7 billion. So Keurig does own Dr. Pepper and Snapple. You learn something new every day in the stock market. I feel like this is a really good starting point for objectifying fundamentally sound companies. We can come back towards the end if we need to make our scan results a little bit more concise, and we can raise these numbers. But for now, let's go ahead and move on to the actual chart setup. So when these fundamentally sound companies are on dips and potentially providing buy opportunities. The first filter I'm going to add to begin doing this is a stock filter. That's going to pop it in here at the top of our filters list. And we are going to add a volume filter, and I'm going to set the minimum volume on the day 123 to be at least 1 million shares. Just don't show me any really light volume crappy companies. That also gets rid of all the like in a volume crap we were seeing. So now, once again, fundamentally sound companies that are trading pretty heavy volume. We are now down to 268 results on the list already. Next, how do we scan for the specific chart setups? How do we find when these strong companies are actually on the dips, providing us with potential buy opportunities? I've got two main ways that I love to do this that I have found work well. The first is a macro, sort of larger image of whether the ticker is strong or weak. And the second is a more direct what's happening right now with either the strength or the weakness of the ticker and I'll show you how you can set both of those things up. So to filter for chart setups, we are of course going to add another filter, this time a study filter. I will then come into the pencil icon of said filter, and while you can use the condition wizard, I find the ThinkScript editor to be way easier. I've been coding in ThinkorSwim now for 5 years. It's sort of what we do on this channel. So if you're interested in custom ThinkorSwim coding, make sure you subscribe down below. But the first sort of, as I mentioned, macro image of weakness, of course, that we would like to scan for in this ticker has to do with the 200 length simple moving average. I want to see when the current price, or represented by close within ThinkorSwim, is less than the simple moving average study with the length parameter set equal to 200. So essentially, when the current candle is below the average closing price out of the last 200 candles. Go ahead and hit OK on this. We're currently at 268 stocks in our scan results. As we run this, we are now down to 121. We've got NVIDIA, SMCI, etc., etc. Let's go ahead and look at some examples. Oh, look at Google on the chart here. So I've already have the 200 simple moving average turned on. Google, of course, a huge company, and below the 200 simple moving average. Hopefully it is on the scan results. There it is right there. So there's a good example right there. Very strong company, currently on a nice macro dip. Might be a buy opportunity. Once again, as with any scanner or anything that I show you on this channel, does this mean you should like randomly go out and buy Google? Oh my God, Trey said it's a strong company below the 200 simple moving average. No, this does not mean it's going to bounce or anything like that. But wouldn't you like to be alerted whenever a company like Google is below its 200 simple moving average? Look at how many times that has provided you with a very good buy opportunity. I mean, it would have been on the scanner here. Of course, 2022 was a bear market for the entire market, but even if you were buying here, you did very well, right? Then it would have been on your scanner right here, would have been on your scanner here, and it's of course back on the scanner now. So yes, it's not guaranteed to bounce, but you definitely want to see names like this on a watch list. The other stock we were looking at is NVIDIA. This one, not under its 200 simple moving average very much recently, just was though. I mean, what, like a month ago just was, and gave you an extremely nice bounce. Of course, it would have been on the scan results here, and you would have gotten a really nice bounce out of that. So while don't just go randomly jump out and buy these stocks, it is really nice to have a watch list like this for potential entrances on very strong companies. The second filter you can create, as mentioned, instead of looking at such a large picture like the 200 length simple moving average does, this filter will show you what is weak right now, what is currently in a hard dip. So let's go ahead and hop back in and let's add in another study filter. At first, we will run both of these together and see what kind of results we get. Then we'll turn one versus the other off and see what kind of results we get. So of course, back into the pencil of this study filter. This time, I want to see when the RSI study is less than 40. That easy. When the relative strength index value is less than 40, that means that the stock is currently on a pretty hard move down. As we run this scanner, and remember, right now we're running it with both below the 200 simple moving average and RSI less than 40. You can see we are now down to just 64 stocks. NVIDIA no longer on the list because NVIDIA is not actually, even though it's dipping back below the 200 simple moving average, the RSI value here is not below 40. But look at sort of the difference you get between these two, right? On NVIDIA, the RSI was below 40 here. The RSI was below 40 here. It was below 40 here, and it was below 40 here and here. So most of these cases, this last one was, but most of these cases, you're still a macro strong company. You're still above the 200 simple moving average, but you're right now getting a dip. So it's sort of you have to decide, are you more interested in sort of the larger picture dip, or are you more interested in what the ticker is doing right now? Anyway, let's take a look at some of the stocks on this list. Google is, which of course we've already looked at. We can take another quick peek, but as you can see, Google getting kind of hammered right now, which is sort of starting to pique my interest personally. Once again, not telling anyone to go buy it, but Google is getting hammered. The RSI is currently at 28, which is a little bit crazy. But of course, that does put it on this scanner. And of course, as you look back, once again, would have been on your scanner here, would have been on your scanner here, would have been on your scanner during this whole dip. So once again, providing you with some pretty nice opportunities right off of a simple watch list built like this. So looking at the current state of this scanner, you may notice that I actually skipped over the first stock on the list because I didn't recognize it. LICN, it's some Chinese company, it seems. If we go look at that chart, I mean, this is just a really crappy chart. This is not what Warren Buffett was talking about when he's talking about be greedy when others are fearful. So we need to find a way to eliminate companies like this one from our scan results. That's sort of what you do while you're building a custom scanner. As you're building it out, you look at the results, and if there's something on there that you really don't like, you really never want to see something like this on this type of scanner, then you find a way to filter it out, right? Well, let's go ahead and come back into filters, and this time we're going to add another fundamental filter. One I've sort of skipped over at the beginning of the video because we were just focused on finding companies that make money. But another fundamental filter I love is the sales per share filter. And I love this one a lot because its secondary drop down here includes a year over year percent. So essentially we can take a look at only companies that are growing. So now I'm going to go ahead and set this to a minimum of 10. So now not only do the companies need to be making money, but they also need to be growing in their sales per share at least 10% year over year. If we run this, we go from 66 results down to 31, and that LICN stock gets on out of there. Now down to just 31 results. That is a pretty concise list. And actually, I expect the list to be bigger than usual right now because the S&P 500 is on a pretty decent pullback. So right now there are more stocks than would probably normally be on this list. So I'm pretty happy with 31. So let's move on to the next very important topic that very often gets skipped when people build scanners, and that is sorting your results. You want to see the stocks that match your thesis the best returned at the top of your scan results. Right now, I'm just sorting top down by volume. Show me which stocks have traded the most volume on the day, and that's fine. It's like a fine default way to sort your scanners. But what is that really doing to help achieve our goal? Remember, we're looking for the strongest possible fundamentally sound stocks that are currently on dips. This type of sorting isn't really doing anything to help accomplish that. So we can add a new column to our scan results within ThinkorSwim by clicking on this tiny cog here to the far right of our column headers. Into customize, you can now look up or build your own custom columns. We're not going to build a custom one right now yet, but what we're going to look up is this EBITDA number. This is your earnings before interest, taxes, debt, and amortization, or whatever that word is. Let's go ahead and turn that on, and let's go ahead and sort top down by this. Basically, show me at the top of my results here the strongest stocks, the stocks making the most money that are currently on dips. I mean, right now at the top of the list, we have Microsoft. You're telling me that Microsoft, the biggest company, or like the second biggest company, that them and Apple and a couple others sort of dance around each other, but one of the biggest companies in the world right now is trading both below its 200 simple moving average and below the 40 relative strength index, is on a pretty nice dip. That is something that you would like to have on your radar, along with all these other stocks. We've looked at most of them, but Google, Qualcomm is on here now. This is another obviously massive stock that makes a ton of money, currently on a really nice solid dip. These are all things that you basically need to have an idea of. You need to know when these types of companies are on these types of dips if you're looking to outperform the market over time. We're also, of course, using a couple of study filters for chart setups to objectify weakness of these companies. So another way that you could sort your scan results is by utilizing those study filters to find the stocks that are on this list that are currently the weakest. So I'm going to turn off the EBITDA column and I'm going to turn on the RSI column. Now, if we sort bottom down by this, so essentially seeing the stocks with the lowest RSI now at the top of the list, we're going to see stocks that are making money, have a good growth story, but are currently getting hammered. This stock TTEK has an RSI sub 15, which is crazy. TTEK, as we load this in, this is indeed a stock that is currently getting crushed. Now, sort of the next step you would take when utilizing a scanner like this is to look at the story, right? We are finding strong stocks that are growing, but in order to get a visual of that growth, especially when you're looking at super weak ones like TTEK, I like to go to a site called Macro Trends. I actually really love this site. I use it for a lot of my at least high-level fundamental analysis. I'm in the revenue section, and this chart is showing us the quarterly revenue, obviously revenue quarter over quarter, should I say. And you can see this stock has a really good growth story. A really good growth story. That is why it's appearing on our scanner, right? 10% sales per share growth year over year looks really nice. However, you do want to make note of the last report. So the last time information was pulled into this website was December 31st. Today is February 27th as I'm making this video. So December 31st, and let's go back and look at the chart. December 31st was here, actually. Okay, so the dip had already started, of course, getting hit a lot harder since. You'd want to find out, of course, what happened over the last 2 months. You'd want to find out what news caused this. You really need to then do some deeper understanding of a company like TTEK, but you can see at least it had a really, really solid growth story, now getting hammered. This is going to then launch you into doing further fundamental analysis, but you know you're doing it on stocks that deserve to have it done on, right? This stock had an amazing growth story. It is worth looking into what killed that, and maybe it's an opportunity for you to take advantage of a dip, or maybe it's not. Like maybe something fundamentally changed with this company and there's a reason why it's down 37% and you should avoid it. You should hopefully find that out in your own fundamental analysis, but using a scan like this just saves you hours and hours and days and weeks of time doing fundamental analysis on crap that doesn't deserve fundamental analysis, on stocks that never had stories worth looking further into, right? I would say TTEK, even though it's getting hammered right now, and as I'm making this video and talking about it, I haven't done the research. I don't know why this thing is down, but I think this is probably one worth looking into because of how well it was growing before. And once again, this scanner is putting this chart on your radar. Next, we can also build a custom column, as I aforementioned, to show us the percent change difference that the current price is below the 200 simple moving average. This would just be another way to find stocks on this list currently on the biggest dip. So once again, into our customize here, this time you're going to look up a column named custom. You'll see something like custom 1 through 19. I've already used a lot of mine, so my names are a little different. All that really matters is you see this scroll icon without a lock on it. That means that you can jump in and you can edit the code of this column to build really any custom columns you want with information that is available within ThinkorSwim. Once again, an extremely powerful tool, and once again, something we do very often on this YouTube channel. So to build the percent change difference from the current price and the 200 length simple moving average, we of course need to use the percent change equation, which is simple. It is new value minus original value divided by the original value again. Of course, multiply that whole thing by 100 to make it a percent. So our new value, what we want to compare against, is the current price, is close. So we can just leverage this close that's already here. We can subtract that from the original price, which is the simple moving average with a length set equal to 200. Then, of course, I'm going to wrap this entire thing in parentheses so that this is grouped together as the numerator of our equation, and we will divide it once again by our original value of the 200 length simple moving average. I'm going to wrap this whole equation in parentheses so that the whole thing gets multiplied by 100 when I do so. Now, of course, make sure you turn on this column. I'm going to turn off the RSI. And once again, if we sort by bottom down, we should see the stocks that are the furthest below their 200 simple moving average appearing at the top of these results if this ever loads in. Did I do something wrong, or is it just loading forever? What did I do wrong? Okay, it looks like I didn't do anything wrong. It's just taking a while to load in. My ThinkorSwim, my internet connection's a little slow right now. But we can take a look. The stock at the top of the list right now is FLR. So if I load in FLR, this is showcasing that it's 22% below its 200 simple moving average. And we can go ahead and do that check quickly. Does look to indeed be about 22% below its simple moving average. So this is was at least a fundamentally sound company currently on a large dip, worth having on your radar. I more so just wanted to show off there how you could make use of different and even build your own custom scan columns there. But I think my favorite for the purposes of this scanner is the original one we sorted top down by, which is EBITDA. Because remember, we are trying to build that Warren Buffett scanner, that be greedy when others are fearful. We only want to be doing that on extremely strong stocks, and sorting top down by EBITDA is showing us the most extremely strong stocks that are on dips. So I like this EBITDA top down, even though I just showed you two others. At a quick glance, I'm just building the scanner for the first time myself. At a quick glance, this seems to be my favorite way to do it. You got to see a really small example of building custom codes within ThinkorSwim. I just want to showcase to you all a little bit more everything you're seeing on the chart behind me here, from the strategy to this dot plot study that is showing you the momentum of the ticker, to these labels that are showing you the statistics of the strategy. Even these scanners running over here are all custom built by me using ThinkScript code. If you are interested in anything that you've seen in today's video, they, along with over 120 other custom coded scanners, studies, strategies, you can even copy the exact workspaces that I use to trade, are available for easy import into your own ThinkorSwim application over on my website, daytradingstrategies.net, and you get access to everything for one low price. I don't sell buy code or anything like that. When you sign up for just $30 right now using coupon code Treyding, you'll get access to all 120 plus codes. Now, I do have it set up as a membership because I am always adding and updating the codes on the site too, so that you can remain on top of ever-changing market conditions. Once I pass 150 ThinkorSwim codes, I will be raising the price of my service to $45 a month. However, only for new members. I don't really believe in raising the price for loyal customers, people that were already signed up before you raise the price. I don't believe in that business model. So if you would like to sign up and continue to get access to codes that I create, do it today. Lock in this lower price forever. And of course, I do have it set up as a membership because I'm always adding new codes. But if you would just like to sign up and download what's currently there, you can cancel your membership with just 3 mouse clicks under the My Account tab. I don't try to lock you in or make it difficult to cancel. I also don't believe in any of that kind of crap. So if you are interested, go check out the website, daytradingstrategies.net. At least click the link in the description down below. Go read the reviews. Just decide if it's something that could help accelerate your trading journey, something that could help make you more than $35 a month extra. Because of course, if that's true, then it's positive return on investment for you. Like if you learned something, subscribe if you would like to continue learning, and go sign up to daytradingstrategies.net to become a better trader today. With all that being said, I'll catch you all in the next one.